Alright, what's up guys? Finally, I have a minute to sit down here and make you guys a video on what I'm looking for in a continuation model. So let's start off here on the hourly. We have a couple of things drawing our attention, okay? We have the swing low, swing high, and this 1 hour fair value gap, okay? So when we're looking on the higher time frame, we're looking for what is price going to be drawn to, which is going to give us the beginning of our narrative as to where price is going to move, hopefully in our session. So first thing I see here is this 1 hour fair value gap formed, okay, prior to our session. Okay, so we have this 1 hour fair value gap formed prior to our session, which is currently being disrespected by price. Okay, at this point in time, it's 5 a.m. in the morning, just before our session starts. So I'm labeling that. I'm taking a look also what we have here. We also have a hourly swing high point here, as well as an hourly swing low created too. Okay, so right now this kind of gives us our range right now, just right off the bat in the morning. From there, I'm going to come on down to the 5-minute time frame, with it, keeping in mind that, you know, here's price and here's currently that 1 hour fair value gap that we identified on our hourly time frame. Now I'm going to see what has price done in the previous sessions. You guys have heard me say this a million times. And right off the bat, right before we, and sorry for saying right off the bat so much, we can see that Asia low got taken out prior to our session, right? So we see Asia low taken out here, creates a new low down here, and then we get this move to the upside, okay? So on the lower time frame, we can also note as well that we're currently in a bearish move here, okay? Or excuse me, bullish move. So we see liquidity, Asia low gets taken out prior to session, and after it takes out that liquidity level, it starts to make a move up, okay? So the fact that it's taken out this liquidity level, making a bullish move to the upside, disrespecting this 1 hour fair value gap, and starting to bounce off that hourly fair value gap, that's starting to give me an idea of what I'm going to look for in the morning session. Okay, so now that we have identified what's going on in the 5-minute time frame, this is typically where I'm going to sit and wait and see what price does in the morning. Okay, so let's go ahead and play out a couple bars here. I'm going to get us to 6:30. So price reacts nicely off that 1 hour. And then here's 6:30 a.m. in the morning. We get a giant expansion candle, right? Displacement. And we end up displacing through this 5-minute fair value gap right over here as well. The one thing that we haven't seen yet, this morning is a liquidity sweep in our session. However, knowing that price has taken out the Asia low prior to our session start, you know, I'm not too hung up on seeing a micro structure liquidity sweep. So, but we do get this aggressive move to the upside, rejecting off this hourly bearish fair value gap, and then also displacing through this 5-minute bearish fair value gap. The next thing I was looking for is, can we hold price above Asia high, or is this going to be the liquidity sweep it was looking for to then give us a reversal model back down to the downside, to the sell side? So what I ended up seeing this morning is, if you guys understand and know the criteria for an impulse candle, we met all the criteria for a 5-minute impulse candle. We came back down below this liquidity level here and then continued the move up, okay? So I ended up getting in on this candle right here, and I targeted the swing highs, the rejection highs, that I'll show you guys in just a moment here. And I placed my stop loss down below this fair value gap, okay? If you look up here to the top, you see we have these near equal highs up here. This was my target for the morning. So with that in mind, right, we have a decent trade set up now. off this impulse candle. Let's go ahead and play out a few more bars. And price continues to rip to the buy side, okay? And this is where I ended up hopping out of the position. Right up here towards the top. I had set and I'll explain this to you guys here too. I had set a fair value gap here that we seemingly respected right off the rejection of it here. However, I trailed my stop into profit, and this is how I manage my trades. I trailed my stop into profit so that I wouldn't give back any of this move, okay, this expansion move, because we were nearing these rejection highs, right? We're right in the zone previously, right? That was rejected at this price level, okay, like literally right off of it. Do you guys see that? So knowing this, I'm going to trail a little more aggressively. So we'll play out a couple more bars here, and this was my stop loss was set just below this 5-minute fair value gap. Came back up, rejected off those highs again, and retraced even further into this 5-minute fair value gap. Bounced off again and ended up wicking me out, closing through my stop loss there. So that was my full trade. Let's see, just for the idea's sake, we trade a higher time frame draw on liquidity, right? So a higher time frame was these rejection highs, which ended up also being the New York pre-market highs. So price eventually comes up, taps our TP. Okay, we would have got full TP. Had we waited around until, 9:30, whatever, 9:55 in the morning. But our session, right? My session ends at 7:30 a.m. So I'm going to capture as much as I can. So we ended up capturing a decent trade, right? So this is how I trade a continuation off an impulse candle. A lot of people don't understand how to trade the impulse candles. They look for a fair value gap re-entry, which had you waited for a fair value gap entry today, you would have missed this entire move. So understanding impulse candles as an entry is super important. But that's basically it for a continuation model. It's what I look for. It's how I manage my trade appropriately, and just make sure that I don't give back any of the profits that I make in the morning to the market, and use our higher time frame as a point of reference as to which way we believe that price is going. All right, you guys, I will see you in the reversal model video.